Dear learners, welcome to Effortless Accounts Academy. This video relates to NET Set Commerce Multiple Choice Questions. Unit 2 Accounting and Auditing Part 1. Premium on redemption of debenture is option A personal account, B real account, C nominal account, D none of the above. Premium on redemption of debentures is a personal account. It is a liability of the company that is paid to the debenture holders when the debentures are redeemed. The premium on redemption of debentures is shown on the liability side of the balance sheet. The extent to which an organization uses fixed cost in its cost structure is called option A overall leverage, B fixed leverage, C financial leverage, D operating leverage. Operating leverage is a financial concept that measures the proportion of fixed cost in a company's cost structure. It reflects how much a company uses fixed costs such as rent, salaries, and machinery expenses to generate profits. So the answer is operating leverage. Direct costs are option A traceable to the cost object, B allocated to the cost object, C total cost of the cost object, D none of the above. Answer A traceable to the cost object. Since every unit produced can be determined by how much direct labor or material is needed, the unit direct cost is assumed constant for all products during production. Hence, direct cost is traceable to the cost object like the product. A variable such as an activity that causes cost over a given time is option A cost driver, B cost behavior, C cost center, D none of the above. Answer option A cost driver. A cost driver is a variable such as activity that causes cost over a given time. For example, number of units produced is a cost driver for the cost of direct material. A cost behavior is the way in which a cost changes in response to changes in the level of activity. A cost center is a responsibility center in which costs are accumulated. The concept of budget that requires all levels to work from scratch is option A flexible budget, B total budget, C master budget, D zero based budget. Answer zero based budget. A zero based budgeting starts with the assumption that all department budgets are zero and must be rebuilt from scratch. Managers must be able to justify every single expense. Accounting standard on the effect of changes in foreign exchange rates is option A AS 11, B AS 13, C AS 18, D none of the above. Answer option A AS 11. The accounting standard AS 11 that deals with the effect of changes in foreign exchange rates. AS 13 accounting for investments, AS 18 related party disclosures. Land is not a depreciable asset because option A its value always increases, B there is no maintenance required, C life of land is unlimited, D none of the above. Answer option A its value always increases. Land is not a depreciable asset because it is considered to have an unlimited useful life. This means that its value cannot be reduced to zero and allocated over its useful life. Which of the following is not an accounting concept? Option A matching concept, B dual aspect concept, C true and fair concept, D going concern concept. Answer option C true and fair concept. True and fair concept is a part of English law and is central to accounting and auditing in the UK. Matching concept, dual aspect concept, and going concern concepts are accounting concepts. Deficiency or surplus account in the liquidation of a company is option A list C, B list D, C list G, D list H. Answer option D list H. The deficiency or surplus account in the liquidation of a company is called list H. The statement of affairs shows the deficiency or surplus in relation to members and creditors. List C preference creditors, list D debenture holders, list G holding of the equity shareholders. Which of the following statements is not correct? Option A the PV ratio can be improved by reducing fixed cost. B. Contribution is also known as gross margin. C. The PV ratio can be improved by increasing the selling price. D. Margin of safety can be improved by reducing fixed cost. Answer option B. Contribution is also known as gross margin. Contribution margin is not the same as gross margin, but both are measures of profitability. In the context of standard costing, basic standard is established for option A. Short period, B. Current period, C. Indefinite period, D. Predefined period. Answer option A. Short period. A standard cost is predetermined cost that is used to control cost and evaluate performance. It is established for a short period of time, typically 1 year. This is because standard costs need to be updated regularly to reflect changes in prices, technology, and other factors. Read the following statements. Option A. Marginal costing and absorption costing are the same. B. For decision making, absorption costing is more suitable than marginal costing. C. Cost volume profit relationships also denote the break-even point. D. Marginal costing is based on the distinction between fixed and variable cost. Which of the following combinations give true statements with regard to above? Answer option C. Third and fourth statements are true statements with regard to the given statements. Read the following statements. 1. Financial statements are only interim reports. Financial statements are prepared on the basis of realizable values. The preparation of financial statements is not an ultimate aim. 4. Certain assumptions are necessary to prepare financial statements. Which of the following combinations consist of all true statements? Answer option D. Except third statement, statement 1, 2 and 4 are the true statements with reference to the given statements. Which of the following is not a subsidiary book? Option A. Purchase book, B. Sales book, C. Bills receivables book, D. Assets book. Answer option D. Assets book. Subsidiary books, also known as day books or special journals, are used to record transactions of a similar nature. Subsidiary books include journal proper, purchase book, purchases return book, sales book, sales returns book, bills receivable book, bills payable book, and cash book. Which of the following are the application of funds? Option 1. Redemption of preference share capital. 2. Payment of dividend. 3. Increase in working capital. Answer option D. All the given 3 statements are the application of funds. Application of funds refers to how funds are utilized in a business. This can include various activities such as purchasing assets, paying off liabilities, or distributing dividends. Redemption of preference share capital represents a return of capital to shareholders, which is indeed an application of funds as it involves using cash to pay back investors. Payment of dividend is a distribution of profits to shareholders, which also qualifies as an application of funds since it involves cash outflow from the company. Increase in working capital indicates that the company has more current assets than current liabilities. This is generally considered an application of funds because it reflects a use of cash to enhance operational liquidity. Accounting concepts are based on option A. Certain assumptions, B. Certain facts and figures, C. Certain accounting records, D. Government guidelines. Answer option A. Certain assumptions. Accounting concepts are based on certain assumptions called fundamental accounting assumptions. These assumptions are not disclosed or required to be disclosed, but are used to prepare financial statements. The main purpose of cost accounting is to option A. Assist management in decision making, B. Maximize profits and minimize losses, C. Comply with the norms issued by Government of India from time to time, D. Prepare cost accounts that are in line with the accounting standards. Answer option A. Assist management in decision making. The main objective of cost accounting are ascertainment of cost, fixation of selling price, proper recording and presentation of cost data to management for measuring efficiency and for cost control and cost reduction. Ascertaining the profit of each activity, assisting management in decision making process.